It's Brian Preston, the money guy.
Bo, we talked about housing, we've talked about vehicles. How do you make decisions when it comes to your investments in your portfolio?
Yeah, I think it's interesting. Housing, we say, is one of the biggest purchases that you make, and then vehicles are one of the most often big purchases you make. Well, your army of dollar bills may be like one of the most important financial decisions that you make over your lifetime. So if you're thinking about inflation and how it affects these big decisions, your portfolio has to be one of those. And so what I'm worried about, or what I'm curious about, or one of the things that I think might be happening is, earlier on we said, hey, a great hedge for inflation, a great thing that performs well relative to inflation over the long term, or at least has historically, are equities, are mutual funds, ETFs, stocks, things on the risk on side of the portfolio. So you may be hearing this, like, oh man, you know what I'm going to do? Inflation's coming. I'm just going to load up. I'm going to go buy 100% of fill in the blank, S&P 500, individual stock, whatever, as a means of trying to capitalize on not letting inflation catch you. Well, the thing is, we don't know what the market's going to do. We don't know what the market's going to do over the next year, over the next 3 years, 5 years. We have a reasonable amount of confidence it's going to go up over the long term, but we don't know what it's going to do over the short term. So I would be very careful as it relates to my portfolio construction and my portfolio decision making to make drastic decisions on the risk side of my portfolio right now based on the short term, or even based on volatility we may be seeing. This year started off a little rocky. I would argue that if you are, I'm going to make up a number here, if you're an 80-20 portfolio, ending last year, which was a fantastic year for the financial markets, and then all of a sudden this year, the market gets a little volatile, I don't know that it makes sense for you to go to 100% zero portfolio. I don't think that's the way that you ought to approach portfolio construction. You should have an allocation that really makes sense for your overall circumstance, both when the market's doing great, when the market's not doing great, and also when you have no idea what the market is doing, because your portfolio should be based on your specific risk tolerance, risk capacity, time horizon, unique needs, unique constraints.
Yeah, I'll summarize, because you covered a lot of ground there. Growth assets. My biggest thing is, especially for young folks, don't let the news media or the fear that we're in this inflationary period, because our most recent Q&A, somebody had asked us, isn't stock investing just gambling? And it doesn't help when we are going through such a period of volatility, because we've started off 2022 with a down market, that I think a lot of young people might just say, I'm going to sit this out.
Sure.
So risk on. I want you just to always be buying. I want you to be putting your money to work, create an automated wealth building process. So that's the part where I'm worried about people being scared off from investing. Let me pivot over to the other unique thing that happens during inflationary periods, because I've fallen prey to this, is what about people who need to have conservative assets, meaning they're risk-off type assets? That's your cash reserves. That's your, the things where you might need this money if there's an emergency, or if you're retired, you might need this money to live off of. Interest rates are so low right now that they've squeezed out your ability to make money.
That's right.
So a lot of people are feeling like they have to go further on the risk spectrum. They have to take a little more risk to get that growth or get that return. And that seems great when you go through a year like 2021 where you're rewarded. But I do worry there's a value to what those emergency reserves and that money's doing, because here's where I've seen traps. A lot of people, because like I said, real estate is booming right now. So a lot of you probably do have 6 figures of equity in your home on paper. And it's not hard for you to go to your local bank or online and they're saying, hey, open up a home equity line. You can get a checkbook. You can get a credit card. It feels very
use that equity.
Deja vu to what got us into the financial collapse of the 2008 to 2010. And a lot of people are feeling very comfortable. I see it on Twitter. I see it where people I respect, and some smart people. I even see CPAs out there saying, I don't need cash reserves. I'm letting all my money work because I've got this house. I've got access. And I'm like, remember, bad news comes. I mean, it's not an introvert. It definitely is not an introvert, because you will see market volatility hanging out with job losses. You'll see it with real estate collapses. It all happens at the same time. They're not usually independent of each other. So I always tell people, cash reserves. Make sure you have that emergency reserves there to cover you through the bad times. And then also, I worry about my retirees that are worried about their rate of return and the risk. And then you've got to make sure that any money you need in the next 3 years, especially if you're pulling off, you have a safe withdrawal rate, make sure that money's somewhat liquid, because if it's not, I know bonds are so unsexy right now because interest rates are so low, but it sure is nice that you can pull off without having to sell assets that are down maybe 25, 30% in a downturn. Pay attention to those things. Definitely investing is impacted by inflation. It's impacted by interest rates. You've got to bring this all together. And Bo, that's probably a perfect setup to say, a lot of you are probably successful enough. You might need a co-pilot.
That's right. One of the things we love doing here is loading you up with as much free information as we can. We want to teach you how to make great financial decisions and how to take those financial decisions to build your army of dollar bills so that you can reach financial independence. We do that through the show. We do it through the blog, FYI by FTE. We do it through our resource page, moneyguide.com/resources. We do it through our courses at learn.moneyguide.com. We try to provide all of these tools available, but you may reach a stage and say, man, I don't know, the gravity of my decisions is just too big. The numbers have gotten so big, I'm not comfortable doing it on my own. Or maybe I don't know what I don't know. My tax return used to be a 2-pager. Now it's a 200-pager. I don't even know what I'm doing anymore. I don't understand how all the pieces fit together. Or maybe you're just in that stage of life where you're busy. You've got kids pulling you in one direction and work pulling you in another direction. And you have commitment socially. And you have all these different things happening. And somehow your financial life just keeps getting put on the back burner. If you're in one of those three places, or perhaps you're in all of those three, or some combination of those three, now might not be a horrible time to think about taking the relationship to the next level.